Chicago's apartment market did not garner much demand in the 3 quarters leading up to Q2, even as apartment construction volumes were surging at 20-year highs. Did Q2 bring more reason to be concerned? Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Windy City update. After a few sluggish quarters in the Chicago apartment market, plus an economy growing at a ho-hum pace, plus a ton of new apartment construction, there were some legitimate concerns about the Chicago apartment market heading into second quarter of 2013. Did anything change in Q2? And the short answer is yes, it did. Chicago apartments welcomed in a resurgence of apartment demand in Q2, 3,820 units absorbed. That more than makes up for the net move-outs we saw in the prior 2 quarters. So occupancy is back up close to 96%, 95.7 to be exact, up 50 basis points quarter over quarter. Still down a hair year over year, 20 basis points, and that's due to more supply than demand in the past year. In fact, supply exceeded demand in each of the 3 quarters leading up to Q2. Now, supply overall, though, isn't a big story yet, but there is an awful lot on the way. Just 2,491 units completed in the past 12 months, but there is a huge block in development. 8,357 units under construction. That is off just slightly from the 20-year high set in Q1 of this year. Now, of those, there are 6,191 units set to complete in the next year, and it has been more than 2 decades since the Metro Chicago area added more than 6,000 units in any 12-month period. So this will be an historic number. And here's what makes those construction numbers all the more interesting. More than half of it is concentrated in the urban core downtown submarkets. Just over 2,200 units underway in the Streeterville River North submarket. Another 2,100 units being built inside the Loop. That's on top of 1,000 units delivered there in the past year. And another 721 units are underway just north of those submarkets in the Lincoln Park Lakeview area. And in all of those urban core submarkets, there is still a large pipeline of projects in the planning stages. Now, elsewhere, though, construction is very spread out. Not one suburban submarket has a large concentration of construction product on the way. So with so much supply that's coming up, it was good to see that demand number look so good in Q2. However, it was a bit surprising that so much of the demand was not concentrated in the urban core submarkets while the supply is coming. In fact, most of the demand was concentrated in the suburban submarkets, and we didn't see especially great demand in the urban core. Now, it's too early to say if all this new product is going to struggle in lease up. It's fair to say, of course, it's going to be a challenge given that so much of this supply and process is very similar type stuff. It's all high-end luxury apartment product, and it's competing with a resurgent condo market in those areas. So we're going to keep an eye on what happens in those downtown submarkets. The good news, though, is that rents showed renewed pop in Q2, even in the urban core. We'll dig into those submarket numbers in a minute. Here are the numbers for the metro overall. Rents jumped 2.6% quarter over quarter. That was one of the best numbers nationally, and rents are up 3.5% year over year. That is nowhere close to the peak growth rates that we saw in 2011, the first half of 2012, but it is 40 basis points better than the U.S. average, and it's an improvement from the numbers we saw in Q4 and Q1 when year-over-year rent growth measured just 2.5%. Now let's drill down a little bit more into those submarket numbers. Particularly, I want to look at quarter-over-quarter rent change. Some very impressive numbers in most of Chicago's submarkets. 10 of the 16 submarkets posted rent growth above 2% quarter-over-quarter, and that was led by the Loop. Despite all that construction, rents there jumped 5.8% on a same-store basis, and some good numbers in the other urban core submarkets. Rents up 3% in Lincoln Park Lakeview and 2.2% in Streeterville River North. Among the suburbs, big hikes of 3% or more in Will County, southeast DuPage County, Naperville, and North DuPage County. So those Q2 numbers give us 2 big takeaways. Number one, there is a lot of new product underway in the urban core, and that will likely pose a short-term challenge. But those submarkets are in relatively good shape leading up to that big supply wave, so that is good. And number two, the suburbs are finally showing some renewed strength in both demand and in rent growth. And we think the suburbs are really key to the story next year. We're almost certain that we're going to see some significant cooling in the 3 urban core submarkets. And so it's really all about what we're going to see in the suburbs and whether or not they could carry the metro's overall numbers, and so that the impact of supply isn't all that great for the metro overall in the next year. And so we are forecasting rents to grow another 3.2% and for occupancy to tick down slightly, in large part because of projected strength remaining in the suburbs. And that wraps us up for Chicago. So until next time, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.